Hi, I'm Brad Rosley. Thanks for tuning in again today. Today's video is going to be about health savings accounts. And yes, I've talked about those in prior videos, but people were looking for more information, a deeper dive into health savings accounts. Let me start by saying that I've been experienced with them for probably about 10 years now. We used to have Blue Cross Blue Shield. I've got a family. I've got a wife with 3 children. And we made the move to the health savings account at the same time that we switched from a low deductible health insurance plan to a high deductible health insurance plan. And that's where it all starts. Because in order to have a health savings account, you have to have a qualified high deductible health insurance plan. Also HDHP is the acronym. Now, some people will say, well, geez, I can't afford to do that. What if I get sick or if I have a big expense? Well, the answer to that is simple. For most people, the premium savings from going from a low deductible plan to a high deductible plan is going to be several $100s a month. For my family, we went from $1,200 a month for a very healthy family of 5 to $500 a month. Now, we just saved $700 a month. You might do the same if you have a family. So what happens to that $700 a month? Well, guess what? I turn around and I save it now in my own bank account name, my health savings account bank name. When I was paying $1,200 a month, if I didn't have any claims, the insurance company didn't give me any of my money back. They kept it all. Now I give the insurance company $500 a month, approximately, and they cover me for any big ticket items, which is what insurance is supposed to be for. I take the $700 a month and I save it. Whatever I don't use of that $700 a month is pretty much mine to keep. And thanks to the invention of the health savings account, I'm taking that money, roughly $600 of that a month, because it's capped, is how much you can put in. I take that money and I put it into the special health savings account that gives me a tax deduction. It's federally tax deductible. There's no income limitations. So if you make $300,000 a year or you make $30,000 a year, either way you're eligible to use this type of plan. So how does it work in the real life? Let's say you do have a doctor's appointment and you have a health savings account. The way I would do it would be when I go to the doctor or bring my child there, I would run it through my insurance. Hopefully the doctor is in the PPO program. A couple weeks later, after it runs through your insurance, you get a bill that shows how much you owe after your PPO discount. That's when, in my perfect world, I wouldn't even use my health savings account, only because I like the tax benefits so much. But that's when you pay the bill. If the money you have set up to pay for your health and medical bills isn't at HSA, then you'd simply either write a check. You actually get a checkbook with your health savings account bank. I use HSA Bank out of Sheboygan, Wisconsin. They give you a checkbook if you like it and or a debit card. So you can either pay your bill with your debit card or with an actual check. Keep in mind, as you go out throughout the year and you put your money in your HSA plan, whatever you don't use at the end of the year, it's yours to keep. It rolls over for the next year. And you can add in as you go. If your employer is offering this for you, you can also use this. Some employers, when they make this switch to a high deductible plan, will give some of their premium savings to their employees and make a contribution for them into their HSA account. Whether it's your employer or you, there is a cap on that. I talked about that more in the other video. It depends if you're individual or a couple or family. There's a cap on that. You also get an extra $1,000 a year catch-up after a certain age. But you can look at all that in my other health savings account video. So let's talk about what is covered in an HSA plan. So an HSA is a bank account. It's not a health plan. That's separate. But what can you use your HSA for? There's actually a great list on the IRS website, or if you happen to go to hsabank.com, you can see it there in the Learning Center. Some of the expenses that are covered are medical expenses, such as your doctor's visit, a chiropractor, LASIK eye surgery, laboratory fees, drug prescriptions, all those types of things are covered. So some people say, well, geez, well, what if I'm not sick and never need this stuff? Why would I want to have a large balance? Well, when you get to be older and you go on Medicare, you might want to get a Medicare supplement. The Medicare supplement is a separate premium. You can use your health savings account for that. You can also use your health savings account for long-term care coverage if you get sick. So a lot of people have no way to take care of themselves when they get to be much older and something like dementia hits or they get a stroke or something like that. You could use your HSA balance to pay for that. So how do you get a large balance? Well, you get a large balance by not using the money you put in the plan and ideally growing that money. Again, with HSA Bank, what they offer I think is neat. You can transfer right online money out of your interest-bearing checking account at the bank into a brokerage account at TD Ameritrade. Once the money's at TD Ameritrade, you can invest the money any way you want. You can make it simple and just buy an S&P 500 stock fund. You could buy a mutual fund that invests in bonds or stocks or international, whatever you'd like. You can create your own portfolio. And ideally, the reason you do that is your growth would be far more in the long term than the interest you're getting while the money's in the checking account. The way I've always used it, and generally would recommend, is keep a balance in the health savings account checking or interest-bearing checking account, maybe $3,000 or $5,000, and then when it gets over that, I transfer it out into the brokerage account and I start buying into investment programs that I like for long-term growth. My goal is to have a lot of money in that account. I already do because I've been doing this now for 10 years. I've got quite a bit of money there, and I think you can do the same. So why do I want to have money in the health savings account as opposed to some other account? Well, I've talked about this in more detail in the past. Step one is, the reason number one is that the money that goes in you get a tax break for. It's federally tax deductible. Secondly, while the money is inside the health savings account, inside that brokerage account I described, there's no tax. If you have a capital gain, if you sold something for more than you bought it with, you don't pay any tax on that. If you have growth in the account, there's no tax. If you have it in a taxable account, you do have tax. And lastly, the thing that separates it from, say, a traditional 401k is that if you wait and you use the money for a medical expense that's approved or for anything that's on that massive list that the IRS will give you on the approved expenses, you will not pay any income tax on that money. So it went in tax deductible number one, it grew tax deferred number two, and comes out tax free if used for qualified medical expenses. Now, if you take the money out prior to 65 and it's not used for a approved expense, not only do you have to pay income tax on what you take out, but there's also a 20% penalty. That's why you wouldn't have all your money in an HSA, of course. You'd have other resources. Now, if you wait till after 65 and take it out for a non-approved expense, there's no 20% penalty anymore. So in that case, it would work just like a traditional IRA, and that you put it in pre-tax, it grew tax deferred, and you took it out and paid the tax then. All of us are going to have medical expenses going forward. If you're single and healthy and young, maybe you haven't seen that yet, but time will make that kind of come true, because you will have medical expenses later on in life. That's a for sure thing. So in summary, again, I love an HSA. You got to have a high deductible plan to go with it. The premium savings is what I would use to fund it. When I had enough money inside the account, I would expand it into a brokerage account and try not to touch it until much later in life when you're going to need it. Thanks for listening. Please give me a like and a subscribe so I can grow my base of subscribers, because I'm trying to share this educational information with as many people as possible. I am a certified financial planner. You can visit my blogs at bradrosley.com to get more information about a number of different financial topics. Thanks a lot for listening. Have a great day.